live now. We are live. So let me just confirm from my end if we're actually live. Let me a second. There's no way to confirm aside from. Okay. Hello, Flora. Okay, people are joining. Hello, guys. Good evening. It's good to we're having this section again. Joining us for this session is Onome. Onome is someone that has vast knowledge of the market. He has been in this space for more than 10 years now, I believe, and I'm really happy to be having him join us for today's live session. Right. Before I bring him to introduce himself, I just wanted to make sure to share the link to the live session across my various social media so that others can join the live session. When we have like maybe 10 or 20, okay, let me see 20 people live here, then we can get started. So Onome, I'll just give me a moment. Let me just share the live as well.
Yeah, that's fine by me.
Okay. Let me get the live session. So guys, do well to share the live session as well so others can join, so we can have 20 people here before we get started and start discussing what's happening so far in the markets. So we have 15. When we get to 20 or 20, you can start thinking about starting.
Okay.
Yeah. We have 15 people. I have 12. Let me share across my platforms. By the way, guys, if you can hear me, please drop "I can hear you" in the comment section, and then go ahead to like tell us where you're streaming from. It's very, very important, and do well to also like share this live session like in any community you believe would benefit from what we are going to the conversation we're going to be having today. Do well to also like the video. It's very, very important as well. Once we have 20 people live, we get started. All right. Okay, good to have you, Benura from the UK. Okay, good to have you, Emmanuel, streaming from Bayelsa. Good to have you. Do well to like the live session. Once we have 20 people live with us, we'll get started. So I'm sending you the link. I don't know if I've gotten it.
Yeah, I got it. That's the YouTube link. Yes, I got it. I saw it on YouTube. I got the notification, so I got the link and I copied it.
Okay. We have 19 people here. One more person and we get started. We have 19. All right. Just trying to share it across my community. Okay, have 22 people, so we can get started. So, Onome, how are you doing today? How is the day treating? How's the weekend going?
It's been I mean it's not as hectic as last 2 weeks ago when we had earnings. So but every day is a busy day, but I guess it's been kind of fairly chill. Yeah.
So I mean, we have been seeing a lot of companies drop their reports, but before we jump into that, I would really appreciate if you can tell us about yourself and then what you do at Critical Tales, and also talk about your own YouTube channel, because that I also get a lot of information as well when it comes to the market. There you drop updates, pre-market and all that beautiful stuff. So I believe people that are here on this session will be able to benefit from that as well. So please talk about your YouTube, what you do, aside from your YouTube, what you do at Critical Tales before we now properly get started. And just introduce yourself basically.
Okay, so Critical Tales is a platform that is focused largely on the Nigerian stock market. I mean, we do a bit of coverage of the rest of the world, but the essence, the mission for Critical Tales is to educate and inform people, as many people as we can, about the Nigerian stock market, because we believe it's a market that is there's not much of information about it. And I would say when it comes to breaking down concepts, when it comes to regular updates, a lot of the information available is a bit too high level. So if you pick your basic analyst report, it's not understood by the average person. If you're listening to an earnings call, sometimes it's a bit
Yeah.
high level. So Green Cartel's mission is to to simplify the stock market. So we do that across all our platforms. The Green Warrior YouTube channel, the Spotify platform, and the Twitter handle. Those are our primary platforms. And maybe later in the year, would
Yeah.
probably be a bit more active on Instagram and TikTok.
Okay, beautiful. So guys, do well to check out Green Tales YouTube channel. Aside from their YouTube channel, they're also active on X, on Twitter. Check them out. I personally, people like to ask me where do I get my information from. Aside from different news sources and the NGX, I also get my information as well from Green Tales. Anoma is a wonderful person, and it's good to have you on the call. So let's just get started. But by the way, guys, do well to like this video. It's very, very important to like this video. It's very, very important to you share this video and drop where you're streaming from. During the course of this session, I'm going to like drop a link where you can come live here if you have any questions, if you have any tip you want to give out, if you want to like push back on whatever we have talked about so far. If there's anything you're seeing in the market, you can come live here and join us to have this conversation. So this is basically a place where we get to have good conversations about not just the stock market, about investing, and get to learn together. So getting started, I would love to know. I mean, the year has started already. We have seen what the market is doing so far. The market has been on an uptrend. Many people are looking. The market is looking bullish so far. I mean, we have seen companies drop their annual reports. Which company will I say has I think on my left. I think his network is shaking. Let's wait for Onome to join back again. But meanwhile, I'm going to just drop the link for you guys to come on stage. Just in case you guys have okay, are you back? I think Onome's network might be bad. Okay.
Sorry. Yeah, I'm there. I was typing that I minimized the screen. That I didn't know. I'm looking forward. Hopefully, one day StreamYard creates an app. We really need an app for this. So we can do it.
I see.
Yeah.
Oh,
so that was what
probably
happened.
that's why I left.
Yeah, I'm still here.
Okay, so I was basically trying to ask you, like, I mean, which company has, from some of the reports we have seen so far, companies drop, what has been the most shocking result you have seen? Maybe it was good, maybe it was bad. I would love to
know. Okay. Let me start. Let me start with the good. It's always easier to start with the good. I would say Skyway Aviation. That was I mean, it was positively shocking in the sense that they did better than NACO, which is a slightly bigger player. So I say Skyway. The initiate result was good, which is kind of expected because when you look at the previous quarters, you see the trend. Julius Berger was impressive, positively impressive. I wasn't expecting that. So those were the good ones. The ones that were okay, some of the banks were good as well. Wema numbers were good. FCMB group numbers were good. So those are just some of the ones I think were good. And the ones that were not so good.
Before we jump into the ones that are not so good, let's talk about some of these companies. Personally, for me, I would say I like Wema Bank. I'm yet to look at their report, but I mean, Wema Bank is a company I've been holding personally in my portfolio, right? I would love to know, why did you say Wema Bank you said it was surprising? Is it that you are not expecting that much of a good result? I would love to just share your thought around why you felt Wema Bank was a little bit surprising to you. Yeah.
I mean, it was surprising because when you look at return on equity was 30% or so.
Yeah.
And remember that they raised capital sometime last year.
Yeah.
So to be able to deliver a return on equity of 30%, even though
Yeah.
you grew the equity strongly, I think that number was good. And when you compare it to the other players, when you compare it
Yeah.
to FCMB, when you compare it to Sterling, by all counts, profits,
Yeah.
return on equity, return on assets, especially the efficiency ratios, hands down, Wema came tops. So that was surprising to me because um, of the three of them, I think FCMB Group has the biggest asset base. So that was why that number was surprising to me. Then for Skyway, I mean, NACO is the bigger player, so you'd kind of expect NACO to have a better performance. But Skyway, I mean, Napo's performance was okay, but compared to maybe what I was expecting, the
Yeah.
dirty December effect I was expecting to see, that didn't happen. So they had an okay result, but not as strong as I was expecting. So that's why
Yeah.
these numbers kind of surprised me. Yeah.
Oh, I see. I see. I think I get your points now. Let's now move over to the underperformance. You are about to get into that before I said to like take a pause. So yeah, talk to me about that as well.
Okay, the palm oil companies, Okomo and Fresco, they
Okay.
had kind of signaled that okay, really the numbers went. I mean, they were okay. They were profitable year on year, quarter on quarter. But quarter four numbers were a bit weak. So the question I'm asking myself is, are we going to see that as a trend for the
Yeah.
rest of the year? So those were the two I would say
Yeah.
caught my eye. Then
Yeah.
what else again? I think those two, primarily speaking, are those that kind of caught my eye.
I mean,
Some
yeah. Go
of
ahead.
the
Yeah.
some of the and then kind of some. I mean, some of the usual names like when you look at a what's the name of this firm that's been trending? I mean, Deep Capital, for instance. Not like I was
Yeah.
expecting anything fantastic there, but the numbers are actually poor. So I think mostly the palm oil companies were those that didn't do so well. I mean, the last quarter. So those were actually disappointing numbers for me. Then maybe Cadbury. Cadbury
Cadbury.
numbers. Yeah, I mean, compared to what Unilever is doing, Cadbury numbers weren't so
Yeah.
fantastic. So those numbers are the ones that stood out for me as disappointing.
Okay, so I'm very, very now curious. I don't think TIP is yet to. Okay, TIP has released their own report, and I believe that before even TIP started exploding, you guys have already started talking about TIP, especially on X, and it's even holding sessions with the CEO of TIP and having conversations and trying to understand the vision of the business. Pre those conversations, TIP was a company that was oftentimes overlooked by investors, right? And Tip got my attention just after some of the conversations that was had on Twitter, on X, where we had the opportunity to like, let's say query the CEO, ask a lot of questions, right? And have an understanding of the vision of the business. What do you have to say about Tip? I mean, Tip has been a high flyer so far this year. Many people are now coming to understand that okay, this the guy running this business has some big visions for the business. Can you like highlight, talk about Tip and what you think about Tip going forward, especially with its current price? I think it hits 21 naira or thereabout, and some people have made good money. Some people are still thinking, I think it's still going to go up. What do you have to say about Tip, and what do you think in regards to the expectations? Yeah,
I mean, clearly, if you look at all the quarters last year and just if you take the 12 months year on year, you've had strong growth in revenue and
yeah,
profits. And for me, I think one of beyond just even what the CEO has said and beyond the numbers is when you look at that space, it's a niche space that they are in. They are in waste management
yeah,
and they're able to do high level waste management. So you don't have too many firms in the country.
yeah,
So on that level, that makes it attractive. Secondly, is they have operations outside Nigeria, so they're not just in Nigeria. I think they're in Uganda. I believe I'm right. They should be in Uganda. They're exploring other places outside the country. So that for me gives them a diversified revenue stream. And then lastly, the fact that you have a CEO who's open, who's willing to come out and discuss with the public. I think that's a good thing because that's where you are able to hear directly from the CEO, and that's the culture that we need to see more often on the
Yeah.
NGX. As to pose the offer, I mean, we'd have to see how they go. Obviously, they
Yeah.
stated what they want to use the money for, so we'll have to see post offer what they raise and watch the next 1 or 2 quarters, how they'll deploy it and all that. So, I mean, really, I think anyone who didn't get into tip um, prior to now and who's considering tip will probably need to sit down and work out the numbers that if this firm can sustain this level of growth historically that we've seen, if they can sustain it for the next 3, 4, 5 years, where do I think this company should be trading at? And so you look at your profits after tax, you look at your return on equity and all those things, because tip largely has been run on equity. So I think it then makes
Yeah.
your return on equity a very, very fairly accurate criteria to use. So you can work out what the return on equity for tip is, work out where you think it will be in 5, 6 years, and then work backwards as to what that value would be and what the earnings per share would be. So I think it's a growth play. It's an interesting play. It's a niche play, and I'm looking forward to how they perform in 2026.
Okay, amazing. I mean, a companies many people are also interested in LR leaks. We have seen their results. Personally, I mean, it has not been the best of results. Um, I know they are trying to like do like a turnaround, get into the space where Okomo Oil and Presco is playing, and then we are seeing Presco and Okomo Oil not drop the best of results. Do you still think that there is an opportunity in that space? And then do you think that Ella Leaks has what it takes to be able to leverage on. But I think they are trying to. I don't know if they are able to are successful in the public offer they are doing or they are doing. But do you think that there's an opportunity in that space for Ella Leaks to come in and turn things around over the course of the long run? Because we are not thinking short term here. Yeah,
I mean, I think, oh yes, definitely. I still think it's an opportunity because when you look at it, Nigeria, I believe, is not yet um, fully self-sufficient when it comes to oil palm production. So
yeah,
you still have that gap there.
yeah,
If slash when the country becomes fully self-sufficient, and who knows, maybe we can even get to the stage where we can export, then I would say, okay, yes, competition will be tightened. But they're also doing things beyond palm oil.
yeah,
I think the proposed acquisition, one of the features of the community is that it gives them some exposure. If I'm correct, if I remember correctly, it gives them some exposure to cassava in the existing operations that they have. There's a piggery element to it. So those are interesting plays as well. So with them, I mean, broadly speaking, I'm positive on the oil palm space, even if we don't have the kind of wild growth that we've seen in the last few years.
yeah,
The profits margins in that space are quite good. Demand is there, so I think they'll be able to carve their own niche. What we need to know is the public offer, what are the results of the offer, and then one can then forecast based on the offer. And then if we're able to see the combined entity, so uh, once we can see the combined entity, I just generally have a bit more color on that transaction. It's then easier
yeah.
to forecast where that stock would go in a couple of years. But I'm positive about that space, and I like the fact that with the crude uh, palm oil prices, you can kind of say they're indexed to where global prices should be.
Yeah.
I don't have the palm oil chart in front of me, but if you assume that you're going to see robust demand, and if you assume that yes, in the short term, you're not going to see that explosive growth, But it's a commodity cycle. You have ups and downs. You have slow years. You have fast years. So who knows? Another 4, 5, 6 years, you could have another bull run in terms of crude palm oil price. And if that happens, then I think these guys would make a ton of money. So I'm positive about that space. Yeah.
Okay, thank you so much for that. Another thing we have seen in the market so far is this company that listed by introduction, Zitchlis. We have seen the kind of things that is happening in that space where most retail investors are able to get in. I mean, I would love to hear your thoughts in regards to that company and what you think so far. Do you think um, we are in a market where there's not a lot of transparency, especially what you have seen so far with that IPO by introduction. Yeah, by that listing by introduction, sorry.
Um, for me personally, one of the reasons why I haven't covered it. So I've worked out the numbers internally, at least before before the stock started to run. Tops, that was maybe 2 naira and some fraction value. That probably was the fair value of that stock. Obviously, the stock has run a bit. Um, for the listing by introduction,
Yeah,
I feel that it just doesn't work. It doesn't pay, especially for retail investors, because every time, for the last since CT's got listed, that stock has literally been on
yeah,
full days back to back. So it isn't that you don't have trades. It's
yeah,
possible that the trades are at such a high price. Who knows? It's
yeah,
also possible you have off market trades that
yeah,
people can access it. So I feel at bare minimum, even if they didn't want to do a public offer, they should
yeah,
have done. They should have probably done a bonus issue, a share split of some sort, so that there are enough shares available. Because if I remember correctly, I don't think this has more than 500 million shares outstanding or 600 million shares around
yeah,
that. I believe so. I can't
yeah,
remember. So it's not liquid, and I think the stock has run a bit. It's run a bit too high. Let's see what the full year numbers are. I like the fact that the management seems to be experienced. They
yeah,
have big goals, big ambition. My view with Nigeria is a country where you need to have big goals and big ambitions to survive.
yeah,
If you don't do that, you're not going to go far in business in Nigeria. So it's the stock has run a bit. It's run a bit. I think more supply starts to circulate, then you're going to see the price come down a bit. But I think it's a bit overvalued at its current price point, yeah, in my view.
If you say it's a bit overvalued, that's what you think, your own perspective at its current price, right?
Oh yeah.
Okay. Okay, that's cool. I mean, let's talk about what we are expecting for this year. When it comes to your 2026, let's say expectations for different stocks. Can you walk me through some of your picks, some of the stocks you think could do well? And come this 2026, we are currently at, even though we have seen some of the stocks already start, making some kind of moves. But which stocks are you looking out for this year? Are you there?
Yes, I'm there. I can hear you. Can you hear me?
Yeah, I can hear you. Perfect. Fine.
Oh,
Yeah.
okay, so I would I did a video on this. So if you could check the channel, the very first 2 videos this year were on my outlook, even though I feel that that's a bit dated because obviously stock prices have run.
Yeah.
So I would let me take things sector by sector. I will
Okay.
start with the banking sector. It's probably the most liquid, the most active.
Yeah.
I think that the tier two banks, I'm going to say tier two, or let's start it to make it simple. You have the big five: First Bank, UBA, GT, Access, Zenith. Um, I think that some of them
Yeah.
would reprice upwards slightly. The challenge the banks would have is for banks, they're going to have to turn up or dial up their lending.
Yeah.
And at the same time, if you have an interest rate cut, it will mean that the net interest margin, the difference between the interest they earn
Yeah.
and the interest they pay out, is going to get squeezed a bit slightly. But at the same time, in a election year, business tends to start to slow down in third and fourth quarter of the year. So the banks will be in an interesting space. They're going to need to expand. They're going to have to do so responsibly. So I think that's a broad challenge that the banks would face. Um, I think that from a dividend perspective, a lot of the tier one banking names that have a history of paying good dividends should continue to do so. And some of them should be able to massively increase their dividends because they've cleaned up, most banks have cleaned up their books. And so they're in a much better place. They are much fitter financially. For the tier two names, so every other thing other than the Fugas Bank is tier two. I think that you're going to see more growth
Sorry, when you say
in.
Fugas, can you hear me? So, I mean, there are some many beginners here. When you say Fugas, some people might be lost. So I'll really appreciate if you can just, break down Fugas. I know it's first bank, but like if you can just walk through the Fugas so that they can have a better perspective when you say Fugas. Sorry.
Okay. So the Fugas is first holdings or first hold co, UBA, GTCO, Access Holdings, and Zenith. And so they are the five biggest banking institutions in the country. And so they are the big five banks. They are called the big five, and they actually are sizable because for the banking industry, they account for a huge majority of the deposits as well as loans that are given out. And so
Yeah.
they are the five dominant banks. You may hear the word uh, bank, or for some of them, they are holding companies. What's listed on the exchange is the holding company, not the actual bank. So when you take GTCO is the holding company, and you don't have GT Bank listed. Same thing for Access, same thing for First Hold Co. But informally speaking, people continue to refer to them by the banks because old habits tend to die hard. And for a lot of them, the banks are the biggest entities. So I always like to say in my videos that if you go to Custom Street and say you're interested in, say, First Bank shares, even though First Bank is not the listed entity, people
Yeah.
would know that you are referring to First Holdco. So that's the meaning of, that's why those banks are called the big five banks, the Fugas.
Yeah.
So for every other bank, I mean, I think what I like to call the tier 1.0 banks, your Stanbic IBTC, your EcoBank, I think that they're going to do. I mean, Stanbic has always done well, so that's not surprising. But I think that, materially speaking, Stanbic tends or should trade at a premium to its book value. And so, book value is the figure you get when you deduct liabilities from assets. So, in essence, that's what you get. So, the
Okay.
banking space, I'm cautiously optimistic about the banks. For the telecommunications space, I'm quite optimistic. And luckily, you have only two players there. So when you talk about telecommunications, you have your MTN and Airtel. Obviously, MTN Nigeria is the more liquid entity. So you have a lot of people talking about that. But I'm sure that this is a diaspora audience. So you have people
Yeah.
around the world and all that, especially, and Nigerians are literally everywhere in the world is Nigerians. So um, I think that both firms will do well. I think that space should continue to thrive. There was something interesting that Chief Financial Officer, the CFO of MTN, said in an interview
Yeah.
last year, which is the fact that every time they expand their services, you have demand rising to meet that. And I think it's such an interesting space because you have robust demand in MTN and robust demand in Airtel Africa. Now, for me, when I'm looking at Airtel numbers, I go to Airtel Nigeria numbers. and Airtel. It's like what you have three, four players and big players in that space to list there.
Yeah.
So I think that's the sector that would um, continue to do well. Maybe the biggest risk, or maybe two risks, possible risks you have, the uncertainty that comes to the regulatory environment in Nigeria. Um, then maybe a second one to a slighter level, to a more minor level, would be obviously where energy prices are. If energy costs go higher, and or if
Yeah.
the foreign exchange rate comes under pressure, then maybe they might feel slight pressure. But I'm cautiously optimistic, and I've covered MTN so much, but I always tell people that the easy way to model these firms is to say, look, what is the profit per share or the earnings per share of this firm? If you assume a 15 to 20% growth rate, which is conservative, at least for the next 3, 4, 5 years, what multiple, by how much more should those stocks be trading at? And people can work out numbers. For Airtel, um, at some point in time, and the listed entity is Airtel Africa. For Airtel, at some point in time during the year, we're going to see the mobile money units being listed. And so that's one of the most common questions that people ask during calls. I think that's probably going to happen sometime this year. So the
Okay.
question is, how how is value going to be unlocked for shareholders? Are they going to unlock value by spinning off these shares, giving those shares to existing Airtel Africa shareholders? Are they going to unlock value by listing, and then um, it becomes a standalone entity that Airtel Africa retains a majority stake? But
Yeah.
that clarity around value should then reflect materially in Airtel Africa's price. So I'm guessing, and I guess before the end of the year or within the year, we'll probably have more clarity on that. So that's an interesting space. The UACN is also, I'll probably put UACN and Champion Breweries together because while UACN has the distributor transaction, and that's what materially catapults its revenue and profit.
Yeah.
Um, I think that the profit margins are a bit in the short term will be a bit squeezed at the moment, but by the time they ramp up efficiency, my
Yeah.
own view and a simplistic way of looking at it is to say, look, if I'm correct, I think UACN probably end the year with somewhere around maybe 800 billion to about a trillion in revenue. Now, if you assume a 10% profit margin, and that gives you a profit of 100 billion, and then if you then assume if I recall correctly, the number of shares UACN has is 2.9 billion or so. So
Yeah.
if you
Yeah.
take what, you take your 100 billion and then you divide it by 2.9, whatever that gives you, work out your finance cost. So I think that's an interesting play, and I quite like that play. For
Yeah.
Champion Breweries, obviously the Champion Breweries transaction, the bullet transaction is still in the works. But whatever you think is the cost of that transaction, you can say, okay, how much do I think bullet is worth? And you can kind of work out a rough estimate when you look at the fact that you have the the proceeds from the rights issue are going towards the acquisition of the bullet and the bullet entity. Proceeds from the
Yeah.
public offer are going towards the acquisition of the bullet entity. So, in my view, that then gives you a fair idea of how much it could possibly be. And so, if you put that number and you take that revenue and you add it together, work out what the profit margins you give, it gives you an idea of where that stock um, should be trading at. So, I would say those are a few of the stocks and sectors that I think all things being equal, should do quite well. And then a few other players, the pharma space is there, prices have run a bit, but it's a sector that I'm still positive on. The paint sector is there, I'm still quite positive on that. So those are some sectors that I think have traditionally done well and should continue to do well in the near term. Yeah.
Okay, thank you so much for that. For me personally, I'm just looking at one of the things I'm also concerned about is the campaign season that is we are entering into, right? Historically, I mean, there tends to be like a level of uncertainty once we enter this election period. Sometimes the market tends to now, become a little bit more bearish. I mean, do you factor in that risk when it comes to your analysis? And then, do you think that could also affect the market in some kind of way? Do you think that we could end up having a bearish market heading into the election year, or maybe in the election year? Yeah.
I mean, I don't think it's going to be bearish, at least
Okay.
broadly speaking, right?
Okay.
I mean, the first half of the year, we are in what? We are in February.
Yeah.
Um, I think the first 5 to 6 months should be broadly positive. Um, and maybe the next Q3 should also be positive. Q4 is when things will start to heat up. But I mean, investing is a marathon, and I
Yeah.
think once people know, uh, if you can work out what you think is the intrinsic value of a stock.
Yeah.
Elections are the 5 6 month thing, and then you either have the same president second term or you have a new president. So yes, there'll be ups and downs, but it's just 1 year. And when you think of it, um, Nigeria has handled transitions quite well. You've had a sitting president lose his re-election bid, and the country didn't shut down.
Yeah.
You've also had uh, presidents, I mean, the opposition come in, win the election, so the country didn't shut down. So yes, there will be uncertainty, even just beyond the elections, security issues, the Niger Delta, and all that. So yes, there will always be that, but I don't think that's a problem. And remember that for some sectors,
Yeah.
really, um, they're not really affected. I mean, by the elections. Some
Yeah.
sectors may see some slight benefit from the election. So I'm not bothered about it. In any case, I don't think the elections are this year. Yes, campaigning should start probably in the second, the third or fourth quarter, or whatever. But that should tide us over. What I'm more interested in, and how I tend to view things, is to say, what will be the state of the country post election? And more importantly for me, because I tend to think in chapters of fours and fives, is to say by 2031. So I'm not very fussy about the 2027 elections.
Yeah.
You have what, 4 5 candidates who probably will be running,
Yeah.
formally or informally. Their economic philosophy is known. And so whoever of the people warming up and running between the incumbent president and whoever else to continue, they're pretty much known in terms of economic philosophy and their thoughts. But I'm more interested in 2031, because by 2031 you have one of two scenarios. You have the if the current president gets a second term, he wraps up his second term and he will be transiting. And if the current president doesn't get a second term, you have a new president who will be wrapping up the first term. So I think it's a case ultimately of, do you have a continuation of the status quo, meaning if the current president gets or wins the second term, you kind of know or should expect that you have more of the same thing. Now, if the current president doesn't win a second term, that's when the uncertainty will ramp up. Or if you have post-election violence, huge post-election violence, that's when the uncertainty will ramp up. So I think we should basically be in a good place till Q3 and Q4. And in any case, tips would provide opportunities, because elections are just 1 year. I mean, the companies, the country has gone through several shocks. the last
Yeah.
few years. You have what shocks from the devaluation. You have shocks from the movement of petrol prices. You've had, if you dial back to COVID, you had COVID shocks. You've had recessions and the like. So really, these companies have been through hell and back, and they're still
I'm
standing.
telling you.
So we elect, I don't think there's anything else you throw that they wouldn't be able to withstand. You could probably say many of them are anti-fragile at this point. So I'm not too bothered about that. Yeah.
Honestly, like I really felt it when you said these companies have been through hell and they are back. Like I really felt it because well, I say 3 years or maybe 2020 or during the COVID period, if you check most of the prices of these stocks, I'm like, this is crazy. These guys have really been through hell and they are still standing. So it says a lot about most of these companies that are actually still standing, right? Because I mean the Nigerian economy over the last 10 years has been we have been through a lot as a country, right? And I really believe we are entering a phase of, let's say, more stability, right? So I really can relate when you say we have been through hell and we are back. And I think this is really the best time to actually tap into most of these companies that still seem a little bit undervalued. But one of the things that has really been catching my interest is the rate at which some stocks, which are not fundamentally sound, tend to still, appreciate in price, especially when it comes to most of these penny stocks. I'm now noticing a pattern which I'm thinking is not good for the market, where a company performs badly and then they still declare dividends, or a company perform badly and then you see the next headline that will come out the next day is that they're looking to maybe a company is looking to invest in them or they're looking to buy another company. Like sometimes I don't see the news as a way to make people still stay bullish on them and maybe go and buy their stock or that kind of thing. So, what do you have to say about that? Do you think it's a good thing for the market? Do you think that investors should be patient and not just react to headlines and just try to understand, is this thing really going to materialize or not? What do you have to say about that?
I think at the end of the day, let's look at it from a valuation perspective.
Yeah,
Um, Valuation is both art and is both science. Sometimes the science may be unclear, but the story going forward is clear. Um,
yeah,
but at the same time, I also feel that there should be a minimum standard. And
yeah,
to be honest, I mean, there are two ways to look at it. You can say maybe the regulators need to do a better job, but you can also say people need to up their financial literacy. And people also need to realize that the stock market, investing in the stock market, whether you're doing individual stocks, whether you're doing ETFs, obviously ETFs are less risky. ETFs being exchange traded funds are less risky because you have a wider basket and all. But people need to be able to read numbers and understand a story. And so that way they can then properly, and at the end of the day, that's everyone's personal responsibility. Yes, the regulators could do a better job of education. Yes, the companies could do a better job of information and education. But ultimately, people have to learn how to read numbers. And I think that in this market, people have to learn how to read a financial statement and people have to learn
yeah,
technical analysis. So if you can blend both technical analysis and fundamental analysis, then you wouldn't go wrong. Because at the end of the day, um, it's a market, right?
yeah,
It's a market. People can sell what they have, and anyone who wants to buy can buy. So yeah, I don't want to cost. Hopefully, I'm tempted to cost, but I won't cost that. Some of the numbers are quite poor, but at the end of the day, you have to just look. Sometimes in investing, you look beyond the numbers and you look at where the company is going. So if you take a if you take a tantalizer, for instance,
yeah,
the numbers the numbers tell you the past, right? The numbers don't tell you the future. But
yeah,
you can clearly see that you have new key investors. You're seeing movements in the balance sheet. Now, whether it's cash payments or non-cash payments, that's a whole debate. But you can clearly see the direction that company is going. Now,
Yeah.
the question one will have to ask is, in cases like that, do you wait for the entire picture to be clear
Yeah.
before investing, which is sensible? Or do you say that, okay, I see where this company is going to, I see the current direction. The numbers may not reflect that, but I would take a punt on it, So there are cases like that. And then there are also cases whereby the company is just has really poor balance sheet. So if you look at a Archie Briscoe or you look at a Darkoms,
Yeah.
those I mean, with Darkoms, there's nothing new, right? That balance sheet is poor. So for an entity like that, that's where technicals come in.
Yeah.
So people just have to decide, and at the end of the day you also have portfolio management, right? If you diversify, and I always say this, that in investing you should diversify within a portfolio and you diversify across the portfolio. So a typical portfolio for someone who's say maybe in their 20s to 40s should have a blend of low risk, medium risk, and high risk. And
Yeah.
then when you take the high risk components, your high risk component could then be stocks, crypto, startup investing, depending on your pocket. And so when you then take that high risk component, you have to diversify. So if I have 20 naira invested in the Nigerian stock market, that is high risk because it's stocks. But that 20 naira should be properly spread. If my portfolio is sizable enough, it should be properly spread between the growth stocks, the value stocks, and then the speculative plays. So
Yeah.
the challenge people have is that people go heavy maybe because the stock is cheap. People go heavy because the stock is trending, or people go heavy because hey, someone said buy. um, at the end of the day, you have to know your why, right? But if you do proper portfolio diversification, and you can either do fundamentals or technicals, then you should know some stocks are for play, some stocks are for the long term. And if you just don't have that kind of savvy, then the honest truth is maybe stocks aren't for you. And you should probably do an exchange traded fund that covers the broad index, or you go do a mutual fund that picks bits and pieces across the market. Yeah.
Yeah, thank you so much for that insight. And one of the key things is, at the end of the day, if you do not know how to find these stocks and spread them across your portfolio, then you might want to do ETFs, exchange traded funds, or you might want to do mutual funds. And these are some of the best ways to invest if you don't have the time to start picking individual stocks and trying to build a portfolio for yourself, right? And again, one of the things I also want to highlight is that when Onome says 20 naira, you spread 20 naira. He's not saying if you have small capital, you start spreading it across maybe 10 stocks. He's basically just trying to use that as an example. For me, I don't think it's wise, if you're using small capital, and trying to spread it across different places. That's my own thought process. I just think it's all about finding quality businesses, and then, I believe when you have small capital, weight is better than spreading yourself too thin. I don't know if you have the same philosophy, or if you think a little bit different when it comes to that.
Honestly, it depends on. It just depends on where. It depends on who the person is, what their goal is. So, for instance, someone might say, "I have 10,000 naira to invest." Seplat is, for instance, 7,000 plus. It's around 7,3, I think, or a bit over 7,000 naira share.
Yeah.
You could say, "I only have 10,000 naira. So, what I'm going to do is that for the next 1 year, I'm only going to buy Seplat." Now, that is a highly concentrated strategy,
Yeah.
right? You have dialed up the risk, but while it is highly concentrated, your duration within which you are going to apply that strategy is for the short term.
Yeah.
So, for some person, that there's absolutely nothing wrong with that because you know that I'm going to do this for the short term. But you see, that's where the individual story comes in. So if I'm a
Yeah.
22-year-old who has 10,000 naira and there's a Seplat or there's an Aradel, what I mean, there's nothing wrong in saying Aradel is what 850, 900. There's nothing wrong in saying I'm going to spend 1 year and I'm going to focus on Aradel.
Yeah.
There's nothing wrong with that because you're only going to do that for 1 year. If you work out your numbers and say in 5, 6, 10 years from now, where do I think Aradel will be trading? Will it be trading at 3 times its value? Will you be trading at 4 times its value? Will you be trading at 5 times its value? Then you
Yeah.
can sacrifice 1 year to do that. Another person might say, okay, I have 10,000 naira, so there's no point buying one share of Aradel, which is 850, or buying one share of Seplat at 7,000. I'm going to look for a stock that's maybe 20 naira a share or 50 naira a share to give me volume. That model also works quite well. So I think it's just knowing what strategy and what you're doing. A year in some ways is a short time
Yeah.
because the average person is probably going to be investing. If you're in your 20s or 30s, you probably have 20 to 30 years to invest. So if you want to concentrate on, I mean, you have people around globally who maybe the only investment they had at the point in time were Tesla shares or Netflix shares, and
Yeah.
that went on to do quite well, right? So there are success stories and there are also failure stories. It just all depends on what you're doing, but it goes back to what is your strategy. If my strategy is I want to focus on this one stock for 1 year because I only have 10,000 naira, then it makes sense. If your strategy is I want to focus on volume because I
Yeah.
believe that a 20 naira stock in 3, 4 years could be 50 or 100 naira, then it also makes sense. And it also then depends on who the individual is. So someone who is risk averse might say, you know what, I need to spread my 10,000 naira in 3 or 4 places. It's a bit too thin, but it's doable. Someone who has a high risk appetite might say, I'm going to buy only one stock for the next 6 months. And then after that, I can diversify. And in any case, income levels and investment levels aren't going to be static. They're going to
Yeah.
increase. So if you're starting with 10,000, chances are in a year or two, or even within the year, you can move to 10, from 10 to 15 or 20, So as long as people know the strategy that they're applying and have a clear idea. But one thing I would say is obviously, even if you're starting to 10,000 naira, whether you concentrate in one, whether you split it in two, it's important that as that amount begins to grow and as that portfolio gets bigger, then you spread and diversify, sometimes across stocks, sometimes away from stocks, So either strategy works. It all depends on what the person wants to do. I mean, if for instance, let's say you have something crazy happen in the world and Seplat or rather Seplat goes from 7,000 naira to 4,000 naira or
Yeah.
5,000 naira, then if I decide to focus on Seplat for 1 year, there's nothing wrong with that because historic history has shown me that if Seplat can move from 5,000 to 7,000 and it goes back to 7,000, chances are I can get back to that 7,000 a share. So it all depends on whatever strategy the person wants to work out. As long as they know what they're doing, as long as they have a timeline, then they should be good.
Okay. Thank you so much. Before we get into the, because I want to start inviting the audience to come here live and join us and ask questions. We are almost 1 hour in. But before I do just that, before I drop the link, so guys, do me a quick favor in the comment section. Drop the place you're streaming from. Um, hit the like button. If you can even share the video, that would be really helpful. I'll really appreciate as well. So to like the video, just take a few minutes to like the video. I'll be dropping a link to join us here live so we can push the conversation forward. And if you have any pushback, if you have any questions, you can join us here and ask your questions. So like the video, guys, is very, very important. So let me drop a link to join us live here. So for those of you that have questions, I've drop the link to use to join. I'm also going to drop it on the WhatsApp channel. Okay, successful is streaming from Abia State. So I'm going to drop a link to also join, just in case you cannot click all your scene on your screen. I'll drop it on the WhatsApp channel. If you are not in the WhatsApp channel, after the live session, I'm going to also put the link in the description to join the WhatsApp channel. Also, Onome's YouTube channel is going to be tagged after this video. So for you guys to also check out his channel and check out the wonderful work they are doing over there at Green Ticker Tales. Okay, Ehi is streaming from Port Harcourt. Good to have you, Ehi. I'm going to be dropping it. I've dropped the link now. Let me go to the WhatsApp channel. So drop the link. Kiran from Enugu State. Good to have you, Kiran. Good to have you. Let's see. So I just dropped the link now on the WhatsApp channel. Just in case you want to join us live here. So guys, please drop where you're streaming from and like the video. It's very, very important. Just give me a moment. Okay, streaming from Jem, streaming from London. So guys, I've dropped the link to use to join the live session just in case you have any questions. Okay, Chira for Mori Delta States. So let's push the conversation forward. Okay, we have someone here, Baby Lula Bees. Not Baby Lula Bees live. So let's talk a little bit about the insurance sector. I mean, they have recapitalization coming up very, very soon. Is there any stock you're looking out for in that sector? Hello, Amenelika. Can you hear me?
Loud and clear. Is that for me or the person who came up?
Okay. Okay, I think that was from me. That was a question from me. But before you answer that, let me just interact a little bit with those in the comment section. I was just asking a question around the insurance sector and stocks you are watching. But before you answer that question, let me just give shout out to those in the comment section. So I'm Alicia. Hello, Otis. Hello, Otis. Bula Sugar from Kwara State. Good to have you. Benson Watunde from Ethiopia. Good to have you, Benson. Bami Boye, great. Good to have you from Anambra. Good to have you guys. From Ocean State, Adebayo. Good to have you, Adebayo. Okay. Larry from London. Good to have you, Larry. It's good to have you guys from the diaspora joining us as well. Lamatema from Lagos. Good to have you, Lagos City boy. Jennifer. Good to have you, Jennifer from Abuja. Vera. Good to have you, Vera from Imo State. Vera Rumaka. Good to have you, Meditation Hall from Checks. Interesting. Good to have you guys. So I was asking a question in regards to the insurance sector. I mean, they have I really like sectors that are going, through, let's say, the construction. We have seen the insurance sector. They have like this recapitalization that is coming up very, very soon, in the month of I think around April, May, sometime around that period. For me personally, stock I'm really looking at is Name Insurance. I think they're one of the best players in that space. I would love you to share your thoughts about the insurance sector. Are there any stocks you are watching closely, and are there any stocks or companies you think would be able to hit that goal of raising the amount? I think over 15 billion naira or thereabouts. They told them to capitalize. I would love to hear your thoughts on me.
I mean, I think that most insurance firms would be able to meet that goal. Any insurance, the question is how, right? How? So if you want to categorize the insurance firm, and there's no formal category by this, but if you're going to look up at asset base, you have your tier one insurance firms, your AXA, Mansard, your NEM, your custodian. I mean, custodian is a holding company, but categorized as an insurance firm. So tier one, those tier one. And then maybe you have what I like to call tier 1.0, which is they're not quite tier one, but they're not tier two. And that's where you have your consolidated hallmark, your um your sovereign trust insurance and the like. So I think literally most, and then you have the rest. The rest of them will be tier three. Uh, then you have your Regency Alliance, your Guinea linkage. So I think most insurance firms will be able to meet it. But for me, what and you can notice that pattern if you take a census, right? You will see that for a lot of the insurance firms, and it just tells you how small the insurance sector is. If you look at it, for a lot of the firms, the non-insurance, the investment income is way
Yeah.
bigger than the core insurance income. So that tells you that the insurance space is still quite small. Um,
Yeah.
that also in the near term could possibly put them under pressure because now you have high interest rates, meaning you can earn high returns on or you can earn decent investment income. If
Yeah.
slash when interest rates go down, you're going to see your investment income decline. And for some of them, you already saw that trend in
Yeah.
2025. So I think it's important that when people go through those numbers, I mean, if you take a custodian, for instance, strip away the FX gains for 2025 and 2024, you have materially lower numbers. Yes, you will still have growth
Yeah.
year on year, but it's just better to work with those numbers and you can cascade it down. So I think for most of them, um, they should any insurance firm that can't meet recapitalization, maybe if that happens would be a case of maybe they've not been in agreement with the terms and conditions,
Yeah.
or maybe the books didn't hold up to weren't attractive. So I'm broadly positive on that space. The only challenge I have with the insurance sector, and I think I've done a couple of videos on some of the firms, is that a lot of the quality names literally are trading above book value. And
Mm.
maybe I'm a bit conservative, but if a stock is trading above its book value, then I don't have a margin of
Yeah.
safety in buying that stock. The question I would always ask myself is why would
Yeah.
I want to buy an insurance stock at 1.7 times book value or 1.8 times book value uh, when in the same financial services space I can
Yeah.
get a banking stock that is half its book value or 60% of its book value. So a
Yeah.
lot of the names are kind of pricey, whether it's tier one names, tier 1.0, tier 2 names. A lot of those names are pricey. So I think it's a case of sitting on the fence till I see a material dip, and then one could consider. And then another way to look at it is, and it's easy for anybody to do, is to say take all the insurance companies, line them up by
Yeah.
return on equity and return on assets. And so if you do it that way, you probably have maybe 3 to 5 names that meet the cutoff of return on equity, double digit return on equity, and maybe high single digit return on assets. At best, you have maybe 4 or 5 names. So I'm trying to shy away from names because let's be candid with ourselves. Um, if I tell people to pick up a gun to shoot, they will do that. And so
Yeah.
when you have that kind of influence on people, you have to be a bit circumspect about
Yeah.
what you
Yeah.
say. Because
Yeah.
for me, I know that these names are well above book value. So it's kind of difficult to start to talk about that. All I would say though is people should line up those companies, and I'm sure I've probably done it and you've done it. Line up those companies, compare return on asset, return on equity, look for the highest 5 names, and then wait for a decent pullback to get in. Or alternatively, um, if we see equity raises, because most of them are going to raise equity, right? If you see equity raises and then you take that subset and there's a sufficient discount between what the current prices are and
Yeah.
whatever the equity price raise or the price offers would be. If there's a sufficient discount and they meet a cutoff, then people could do that, So I'm kind of sitting on the fence for most of them till I see a decent discount in current prices.
Okay. Thank you so much for that. So let's now have people share their ask their questions. So first, let's go with baby Lulabies. Baby Lulabies, you join the live. Do you have any questions? You can unmute your mic if you have anything to say. Baby Lulabies, do you have anything you want to say?
No, not at all.
Can you hear me? Baby Lulabies.
Please, let
No,
me
no,
ask
no, no,
you a
no.
question.
You don't have anything to say.
No. Thanks. Just saying.
I have to remove you
I
from
have
the
a
studio.
question.
Nobody should unmute their mic. When I call you, you ask your question, please. Let's be organized. So next is Prince, Mr. Prince. Mr. Prince,
Yeah,
unmute your mic.
good day, everyone.
Good day, Mr.
Good day,
Prince.
Mr. Micah, our coach, and our fellow coach on board. So, my question is, when do we expect to see a bearish moment in the market? Because stocks that you have been mentioning for us over time have started being bullish. Stock like VDF Group now is already on from 11 naira now is entering 12, and I'm sure within this week now it might enter maybe 15 or 20 naira just like tip. So when do you expect the market or the stock market to be bearish? Is it within this month, the first quarter, or is it the second quarter or the third quarter? So that you can
Okay.
know when to enter the market. Yes. And when also to take profit for some people that are trading. But for us that are long term investors, when do you think will be the moment to enter the market?
We get your question. Okay. Before you answer the question, let me go ahead to say something. Please, one of the things, as much as I like, if you guys check, I've tried my possible best to reduce making videos on which stock to buy and all that stuff, right? Because it tends to bring in the wrong mindset when it comes to investing, and that's why I go on to ask questions like, when do you think the market is going to go down? When should I enter? I don't like to answer those questions. So, um, um, what I would say is, I don't know. Do you have anything to say? Because for me, I don't want to say it's a bad question, but I don't really like to answer a question like this. But if you have anything you want to say, please go ahead to say. But for me, I don't have.
Okay, so let me take it from a different perspective, or maybe from two angles.
Okay.
The first is there are two ways to look at it. What do you think is the intrinsic value of whatever stocks you're interested in? Are they trading below their intrinsic value, or are they trading above their intrinsic value? Even with the market at an all-time high across different sectors, there are stocks that are either trading well below their fair value or are just about fairly valued. Now, for stocks that are fairly valued, the play would then be if the company maintains its current growth trajectory in the next 3, 4, 5 years, and then you can then work out your best case scenario, your worst case scenario, and I've forgotten the technical name, your most realistic scenario. If a company is growing its profit at, say, 10% every year, in 5 years, what would that be? And you can then play around with those numbers. So whatever today's prices are, in some ways, current stock prices are either a historical belief of where prices should be, or in essence, current stock prices have baked in present day expectations. The question is, what are your future expectations of what those prices should be? based on the individual investment level of growth. And so if you work out those numbers, then today's prices really don't matter. Obviously, yes, you'd like to optimize, and even from a technical level, it doesn't make sense getting in at exactly an all-time high. But if you're not a technical person, if you can tell yourself, based on the company's level of growth in 5 years' time, where do I think this company will be, then today's prices really don't matter, especially if you're not a trader, you have a long-term view. Now, broadly for the market as a whole, yes, you have the all-share index at a high. And so what basic technical analysis will tell me is that as much as possible, you don't want to buy anything at a high. You want to wait for whatever is at a high to pull back, even if it's a 10 or 20% or whatever percentage pullback you determine is reasonable enough. And then you can decide to get in if you want to do so. And then thirdly, a lot of the positioning you're seeing at the moment is because of dividends. So I think one can say at this point, I think it's a bit what you say is dividend positioning. And for the average retail investor, they don't have the skill to do dividend positioning in any case. So one could apply either approaches, wait till after the dividend season is over, and the dividend season is what? Q1 most years, or you could decide on whatever you think or where you think is the future value of whatever stocks you're interested in, and then forget about what today's prices are. Based on your own forecast of future prices, you can then decide if it's worth getting in or not. Yeah.
Okay, thank you so much, Onome. Before you, Prince, I don't know if you have another question, but before that, I just wanted to say that for me, my own mindset is all about, like, I think from an investment perspective, and I don't like to, and that's why sometimes I'm not too bothered about when people are rushing about talking about report. It doesn't mean I don't look at the report, but I tend to be more patient before I go ahead to make my moves, right? So anytime I get questions like how the market, I'm like, why are you asking me this question? Because personally, it does not really bother me because I know the stocks I've invested in and I have high conviction. So I'm not necessarily bothered unless I see something to be bothered about. So sometimes, questions like this, it tends to, do me somehow, if I can put it like that. But yeah, thank you so much for your response to that question. Do you have any other thing to say, Prince?
No, thank you.
Okay, yeah, you're welcome. So I might have to remove you and have someone else. Okay, so we have people. If you guys, in case you join the studio and you're not able to come on live, just be patient. I'll bring you. We are already full. That's why. So the next person is D. Mr. D. Mr. D, you can unmute your mic. Mr. D. Okay, Mr. D is not answering, so we might have to bring on someone else. Okay. Give me a second. So we have Enoch. Enoch. Go ahead, Enoch.
Mr. Micah,
Yeah,
I wanted to ask a question on something that has to do with like the interest, or let's say the percentage return. Now, I want to ask
come again.
because
Sorry,
I feel okay. I want to ask you something. I feel and I think that Nigeria treasury bill or Nigeria investment is better than US. S&P 500, S&P indices, like Nigeria money market fund is better than dollar money market fund and better than the America or the abroad or anything European indices. Because I checked that the percentage return is too low. But what can you say about this? Do you think that Nigeria stocks, Nigeria market, Nigeria index, everything is better than the America? What can you say on that?
Okay, for me, I would say that most of the time, the reason why we have a higher interest rate is because of the kind of inflationary economy we find ourselves in, right? So most times the government tends to, and then the exchange rate as well. So most times, just to be able to attract foreign portfolio investors, the government tends to like increase the interest rate. So imagine you just put yourself in an average institutional investor's shoe. In the US, they are offering you, let me say, 2 to 3% if you invest in some of their in their bonds, right? And then in Nigeria, they are offering you 18%, even though you know that Nigeria is a little bit more risky. I mean, as an investor looking for high returns, definitely you want to go and put your foreign investment in Nigeria, right? So that's why you see things like treasury bills, money market, most of the bonds and other stuff high. Money market fund, they basically invest in government bonds, government-backed bonds. So when the interest rate in the Nigerian economy is high, you tend to see a money market fund, the interest rate is high as well. So I would say that for me, I would say,
Now, since Nigeria are imposing tax and there's too
yeah.
much tax in the economy, there's too much tax in the economy. Which stock or which company do you think is not is affected, and which company do you think, whether the inflation is high, whether the government increase interest rate and increase tax, as currently not President Tinubu the new tax bill, which company do you think benefits more from this tax, and which company do you think that we can still focus on in times of economic instability in Nigeria, instability and inflation and high taxation?
For me, I would say you just need to look at it sector by sector, right? You have to ask yourself which sectors tend to the masses always need, regardless of the situation of the economy. And for me, I always like to say the financial sector is a very, very important sector for any economy at all. The telecommunication sector is another important sector. So it's now all about finding good companies in those sectors. Oname, do you have anything to say in regards to this question?
Okay, so let me start with the second question, right?
Yeah.
First is you have to look at where Nigeria is at the moment. So
Yeah.
where are we? You have the pace of inflation. The pace at which inflation is increasing is trending downwards. You have a appreciating exchange rate. Now, whether it's appreciating because the dollar is depreciating, or it's appreciating because you have uh, more supply of FX. That's a whole other conversation. Whichever way you look at it, the exchange rate is appreciating. So the decision on what to invest or not is dependent on where is the country at the moment.
Yeah.
Now, how you invest in a stable environment is different from how you invest in an unstable environment. So right now, what we have is a fairly stable environment. And I know that the pushback for people is to say, okay, you say the economy is better, but my pocket isn't getting better. And my response would be, it takes time for those effects to trickle down. In some cases, maybe they don't actually trickle down, right? So
Yeah.
really, the decision on what to invest in just depends on what is the state of the economy at the moment. And so if you have a stable exchange rate, if you have inflation, the pace of inflation trending lower, or the rate, and luckily I think by next week we could have inflation numbers for the previous month, that should inform you of where to invest. So that's one. And then two, a decision on what does better in terms. I mean, we don't really have high taxes. Yes, I have my issues, well documented issues with the taxes, but we don't have a significant change in the tax environment this year for the average Nigerian compared to last year or not. So for this that question, really, the companies, when you look at the companies on the NGX, they're not paying materially higher taxes, right? The tax rates haven't changed for most companies. They may fluctuate on a year-on-year basis based on, say, absence of FX gains for the financial services space and all that, blah, blah. So taxes aren't really, in my view, a deciding factor of where one should invest. Probably what would be the biggest factors are one, what what how sensitive are these companies to movements in the exchange rate? And so
Yeah.
if you have a stable exchange rate environment, is it positive or negative for these companies? And that way it's easy to work out. Secondly, is by how much are these companies able to price in inflation? And again, for companies, for instance, in the food space, the FMCGs, fast moving consumer goods, they are not regulated per se price wise. And so they are able to some extent to pass all or some of their price increases to customers. However, remember that I said that you're having a fairly stable exchange rate and inflation, the pace of inflation decelerating. So it means that that should be positive for those sectors. So ultimately, it's viewing those sectors as to those are the factors you need to consider in what to invest or not. Then to the first half of the question, the part I got is okay, which is I'm guessing which is better between your treasury bills, Nigerian treasury bills, the S&P 500. People should have a diversity. I mean, there are two ways. If you are a savvy investor, um, you should have a well diversified, or if you're a savvy investor and you know how to read the macros, you should be able to know what sectors of the world have a stable macro at the moment and what sectors of the world have an unstable macro. And then you should also understand the relationship between inflation rates and interest rates, right? Now, Nigeria is a high inflation environment. And so if you have a high inflation environment, it means that ideally you should have high interest rates. And so when you have high interest rates, the investments you pursue will be different from when interest rates will come down. Now, on the flip side, the US is a low inflation environment, at least compared to Nigeria, even though they complain about inflation there. It's what single digits. I think it's less than 3% inflation at the moment. So in a single digit environment, single digit inflation environment, if you are pursuing a better return, it means that you then have to take more risk, and it means that you then have to diversify to riskier investments, right? So they all play different roles, and it then brings me back to how to diversify, right? You can diversify across countries, you can diversify across industries, and you can diversify across asset classes. So if you have naira to invest,
Coach, but let me say something. I'm not saying that it's a crime to like
okay,
invest
Michael, can you?
sector. Okay, sorry for interrupting. Sorry, but
Sorry, let me come in. Enoch, please allow him to finish so you come, because when you chip in like that, you just interfere with his flow, right? And then you now have chaos. Sorry for muting your mic, Enoch. Onome, can you hear me?
Okay.
Yeah,
Yes, I can. Loud and clear. Can you hear me?
Yeah, I can hear you. He interrupted you, and then there was like an echo. So let me. I don't know. Should I let him speak so that you can?
Yeah, he can go. Yeah, you can go ahead. So in case I miss the question, you can repeat the question for me. Yeah, so you can go ahead.
Okay, Enoch, please unmute your mic. Sorry, I had to mute you because I was hearing too much of echo. Sorry about that. Just go ahead, Enoch. Enoch. Yeah.
Mr. Mike and Coach, why I brought about this thing is that I love what our boss is talking about, diversifying into various or several borders or sector of the world. But when I actually dig into something like S&P 500, I saw that it is not. It's like it takes time. Like okay, imagine I put my money in Nasdaq or I put my money in S&P 500, which tracks the 500 companies in US, and I maybe I invested and you have to take like 20 years. 20 years before you can make even $500,000. I look at like Nigeria sector, whereby I heard like okay, somebody can put like 150, let's just say 150 million in money mutual fund, and every year the person is going to 50 million. So I don't really know whether there's any investment again, any sector or any share that can give you high return, even like Nigeria stock that's giving you high return, like 200%, 100%. So what can you say? Because I don't really, when I look at other investment, I see something like 5% and the return on investment is not even that it's not really that good. So do you think that other investment can do that?
Can I comment? I get your question.
Yeah,
Onome, before you react, I think I get his question. His question is basically if you compare the S&P 500 to the Nigerian market, you see that you tend to get higher returns here in the Nigerian market. Just for us to answer the question and move to another person. Here's what I want to say. You need to understand that you cannot compare the Nigerian market to the US market. The US market have lots of companies. The same way the Nigerian market, there are some stocks that can give you 100x. There are also some penny stocks. There are some stocks in the US that you don't even know, because there are lots of stocks there that can also give you the same kind of return. It's just that the S&P 500 covers the largest, biggest, most stable companies in the US, and then they don't tend to move fast. I mean, they have some high growth stocks there in the index, and they also have some stable companies. So because of its diversified, the kind of returns you're going to get when you invest in individual stocks in Nigeria, you cannot get that kind of returns when you invest in the S&P 500. The two markets are not the same. And now, for me, one of the questions I need to ask you is, why are you looking? I mean, it's good to hedge yourself, like on a said, diversify and try to hedge yourself against the naira. Because I mean, historically, the naira has not really been the best against the US dollar. So probably you are considering, okay, let me invest in US stocks just to hedge myself. So for me as a Nigerian, I makes money in Nigeria and almost does everything in Nigeria. You want to do Nigerian equities or Nigerian asset classes more, and then do a little bit of US stocks, not because you're chasing 10x, but because you're trying to hedge against the naira, right? So if you're looking for stability, then I mean you can be here in Nigeria and pursue US opportunities, but you need to also understand that there's a level of cost that comes with investing in US equities from Nigeria. First of all, is their withholding tax. I think they charge up to 30%. Let me say you invest in S&P 500 from Nigeria. First of all, you have to convert it. You have to do your exchange rate conversion. You might even lose money just trying to do exchange rate conversion on Bamboo. So you have already lost money before investing. So when you not even invest, when they pay you dividends, the US government also take their tax, and their tax system is well structured than Nigeria. They have higher tax than we here. So there's a lot of bottleneck that comes to investing in that side of the market, especially from here in Nigeria. So if I was you, I'm trying to diversify, I'll focus more on the Nigerian market and then do a little bit of the US market just to hedge myself. It's not because I'm trying to make the biggest of money, right? So that's just my perspective. Onome, I don't know if you have anything else you want to say, so we can move on. Onome,
Am I loud and clear? Yeah, I can hear you. I got you. Yeah. So, I mean, I think ultimately it just depends on location. Where are you based, right?
Yeah.
As well as the ceilings. Um, the If you take the S&P 500, the S&P 500 has in the last 15 plus years, I think, or at least over 10 years, is delivered probably a bit over 10% returns annually,
Yeah.
right? So if you trace it, if you take a chart, if you do a 10-year chart of the S&P 500 and you do a 10-year chart of US inflation, you very likely would see that the S&P 500 chart is above the inflation chart, meaning you've beaten inflation. So from a dollar perspective, I don't think that's an issue. That's one.
Yeah.
So I keep hearing part of the question about money market funds. Even if you want to take it locally, you can't compare money market funds to the stock market, because your money market fund is a low. So, I mean, if you want to be technical, you might say it's a medium risk investment, because probably the lowest risk investment is your treasury bills issued by government,
Yeah.
right? Or money in a savings account. Those are typically low risk. So you can't compare both. And in any case, Nigeria is entering an environment where you're going to have a lower interest rate because inflation is trending lower. I saw some of the returns that you saw in money market funds last year, they're not going to occur this year because
Yeah.
you're going to have lower interest rates. So it's about understanding, where are we now? We are in an environment where inflation pace is decelerating. And in investing, you have your lag effect. So for instance, if the CBN cuts interest rates sometime this month, which is February, you're going to take 4 or 5 months and then you're going to start to see lower returns on your money market funds. I remember in any case, a couple of years ago, you had money market funds in 5, 6, 7, 8% in a year.
Yeah.
So they all do different things in your portfolio. Remember that a proper, well-run portfolio, there are two ways. You either diversify across low, medium, and high, or if you're savvy enough, you know where to hold or where to put cash in a high interest rate, high inflation environment, and where to put cash when that environment begins to change. So the same will apply to any country in the world. Yeah.
Okay. Thank you so much for the response. So let's move over to, we have Priska. So guys, there's some people that are also trying to join, but I cannot add them to the stage because the stage is full. So before I add some of you guys, I don't know. Also, we have Mideli. Mideli, you're supposed to be next, but the problem is your mic is not connected, so I cannot add you to the stage. So try to connect your mic and then you join back again immediately. So let's move over to Priska. Enoch, I believe your question will be answered. I might have to add someone else, move you from the stage. So Priska, unmute your mic. Priska. Priska, unmute your mic. You're next. You're muted and then you muted again. Go ahead. Hi, Priska. Okay, so Priska,
Hi, I'm sorry, I'm sorry, yeah, my phone, I'm having issues with my phone. I think it's hanging. Can someone else?
Okay. Okay, do you know what? You can join back again. So when it has, I don't know, so that other people can also go ahead. Joshua, you're next. Joshua, mute your mic. Joshua, we're waiting for you. Unmute your mic. Joshua is out. Okay, so we have Chinecherem. Go ahead. How are you? Chinecherem, we can't hear you. So Joshua, you're not speaking. I might have to remove you from the stage. Chinecherem, we can't hear you. Chinecherem, we can't hear you. Okay, I might have to remove you from the studio as well. Enoch, unmute your mic. Enoch, unmute your mic. You unmuted and then muted back again. I guess you don't have anything to say. So okay, grade 1 just joined. So guys, if you want to join the stream, there's a link that is pinned that you can use to join. Grade 1, you need to connect your mic for me to be able to add you to the stage, so for you to speak. Without that, I cannot add you. Your mic is not connected. Grade _1. And then Enoch, I don't know, you're not speaking, you're not saying anything, so I might have to remove you from the stage as well, or kick you from the studio. Okay, out. So guys, if you want to join this stream, if you have any questions, there's a link in the pin you can see on your screen. There's also a link in the WhatsApp channel that you can use to join the live stream and ask any questions you want to have asked. If you cannot join, you can also ask in the comment section. So let me go through some of the questions we have in the comment section. So we have a question from Wake Up Niger. He's asking, what do you think about In-transact? What do you think, what's your take on Fidelity Bank? And then In-transact here. What was your response to that question? He's asking around.
So I mean, In-transact, I'm just kind of on the fence with In-transact because they were warming up to raise 100 billion, and they went quiet after a while. So the question is, are they still interested in raising 100 billion, or have they put that in a corner? So till then, to one just has to watch and see. Yeah, sit on the fence.
Okay. So what about Fidelity Bank? I mean, Fidelity Bank was one of the stocks that after they completed their rights issue that, and then it has not really been I mean, they're one of the banks I actually do like. Well, in terms of let's say they have done well so far actually, but I mean, I think if you check, I think Wema Bank they are once higher than Wema Bank, and I think currently Wema might be higher than them. But what's your take on Fidelity Bank? I don't have they released their report? I don't think they have released their report. Have they?
No, they've not, but they will meet sometime this month to consider the reports. So I guess maybe in a couple of months they should release it. I mean, so for Fidelity Bank has kind of traded, it's been at that 18, 19 range. And
Yeah.
I don't see anything that would trigger a movement in that stock. And when you look at if you look at its book value, if you go by 9 months numbers, the book value for that bank is 20.9 naira, 20 naira essentially, 21 naira. So if the book value is 21 naira, I don't see what would push it away from that or push it much higher than it is. The only thing that would trigger movement in that stock is when we see the reports. And I also think what kind of broke the momentum for that stock last year was there was the whole court case which had a lot of
Yeah.
noise around it, and so I don't think that the bank effectively communicated um, that it wasn't a big deal because I mean I can't speak to it because the formal numbers aren't out yet, but
Yeah.
that whole issue has been resolved and it was a storm in the teacup, but if the bank didn't communicate, that kind of killed the momentum in that stock. Or if not perhaps that the bank had momentum, share price had momentum. So I don't see anything. I expect that stock will continue to range straight till the results come out. And the results are a blowout, then you see the price moves. And if the results are disappointing, then you see the price react negatively. So till then, I think the stock will continue to range straight.
Okay. Thank you. So we have Chinechurem. Chinechurem, you can unmute your mic and ask your question. Chinechurem. Okay.
Sir.
Enoch. Okay. Chinechurem, go ahead.
Yeah,
Mr.
I don't have much questions to ask, but I'm very happy for you to bring me up in this. But the
Yeah.
question I want to ask is that when it comes to
You're breaking Chinechurem. When it comes to what?
I'm looking for, is it possible in stock can go up to 30%? Is it possible? Is it possible for stock to go to 30%, even though you are looking for capital appreciation? But any stock that you analyze or a company, is it possible for the stock to go to 30%?
Okay. Onome, you can
In a
answer.
day,
Okay, you want to share this in a day?
in a day, no. In a day at the moment, it's not possible. The movement you have is plus or minus 10%. So the highest the stock can move up in a day is up by 10%, and then the lowest it can do is down by 10%. I know that there's a proposal to adjust that. I'm sure before the end of the year we should get those figures. But at the moment, no. You can only go plus or minus 10% in a day. But if it's beyond a day, it's possible. And if you look at just last week's top gainers, the top five, they all did over around 60% or 50-something% in a week. So if it's a day, it's plus or minus 10. If it's in a week, if it's more than a day, it's 2-3 days or more, then yes, it's possible to do 30%. The only thing that you cannot predict if/when that will happen.
Okay. So I hope that answers your question, Chinechurem.
Mr. Micah, I don't know. This now be getting me confused. What is the difference between treasury bill and CB bond?
He's asking your
Like, what's the
question. Can
difference?
you calm down? When you are done with
Okay,
one
sir.
person, you ask a question, please.
Okay, sir.
Chinechere. Okay, Chinechere is done. So Enoch, go ahead with your question. But I think we answered some of your question the last time. But go ahead. I'll
Yeah,
just
yeah.
give an
Okay.
opportunity to ask their
Okay.
question. Then maybe we'll come back to you if that's okay.
Okay, sir. Okay.
Just stay. I'll leave you on the call. Just stay. Let me answer those questions. So immediately you are supposed to be next, but your mic is not connected. So I cannot add you immediately. Your mic is not connected, so I cannot even add you. So just try to see how you can fix your mic so you can be able to ask your question. So the next person we have is Pat. Pat is okay. The next person we have is Pat. Pat, unmute your mic. You're muted, Pat. Pat, you're muted. Just hi, Pat. Pat, we cannot hear you. Okay, so we might have to move forward. We cannot hear you, Pat. Do you have anything to ask? Any question? Okay, let's move over to John Paul. John Paul, go ahead. John Paul, unmute your mic, John Paul.
Hey, Michael.
Hi, John Paul. How are you doing?
I'm okay. And you?
Okay, I'm doing amazing. Thank God for life. So yeah, do you have any questions?
No, I don't have any question currently. I just want to say hi to you and everyone in the house.
Oh, thank you so much for coming, and we appreciate. Thank you so much.
You're welcome.
Okay.
As the program continues, maybe if I have one or two things, I can come in and ask the question.
Okay, thank you. So let's move on. Pat, are you ready to ask your question? If you guys want to, if you want to join the live session, guys, there's a link that's pinned on your screen. You can use that to join, or you go to the WhatsApp channel, join the WhatsApp channel, and then you can see the link to join the live session. Pat, do you have any questions? You're muted, and then do you have any question? Pat.
Hello, yes.
Yeah, go ahead. What's your question? We can hear you now.
Okay, please. My question is that, like a stock now, because I'm new to the investment that is for Nigeria investment, so I don't actually know how it works. Like a stock now, if I buy a stock and they announce that they want to issue. There's a particular issue rights that company want to give to the existing customers. So if I buy I've already bought some units of that particular company. Are you getting it?
Okay. Yeah, I'm getting your question.
So
Go
if
ahead.
I buy more of shares of that company after the qualified date, with the new number of that is share units that I acquire, will it be counted for me to take the rights issue up?
Okay, if you purchase before the qualification date, right?
Yes.
Yeah, definitely. If you purchase before the qualification date for the rights, then you can be able to purchase the rights as long as you purchase the shares before the qualification date. And then when for you to purchase the rights, you need to either go through most likely through your stockbroker. When your stockbroker can be able to arrange and tell you the number of rights you are privileged to be able to purchase depending on the number of shares that you have. And then you now give them your mandate and then they will execute it for you.
Okay, after qualifying to take the right issue, can I buy more units of that share again?
Yes, definitely. You can buy more units of the share again if you want.
Okay, but I cannot take more than the right issue of the qualified shares that are bought before?
Okay. No, you cannot, because you now purchase those new shares after the qualification date. So it's the
Okay.
number of shares you own before the qualification date that gives you the number of
Oh,
rights you
oh,
have access to. Yeah.
okay. And then one more question again is concerning dividend, paying of dividend. Like, if I have a stock that is one particular stock in different broker accounts, and not the same CSC account or ACN account, different. That is, they are both different. So if they want to pay that dividend, how do I receive the dividend for the particular stock that I bought with two different broker accounts?
So as long as you feel as long as it depends. Sometimes a company can actually pay you dividends without you actually feeling that they are mandate. But it's all about the register at the end of the day, right? So then for example, let me say you're using Afri Invest and then you're using Norumega. As long as you have your CSCS, as long as maybe you fill the mandate form and then you connected your bank account, right? Definitely you're going to receive your dividend, as long as what they are going to now do is to calculate the total number of shares you have and then pay you your dividends. So it doesn't really matter, which brokerage firm you're using, because the CSCS is the unified platform that tracks everything for you. So you definitely still receive your dividends.
Okay, on each broker account.
Yes, I'm in the bank account that you connected, right? So it doesn't really matter.
Like for instance, now I have shares with Trove, and I also have some that is in VFD group. I have the shares in Trove, and I also have some with Afri Invest. So let's say, for instance, if they want to pay their dividend, how do am I going to receive the dividend separately into the two broker accounts? Because along that, they say there used to be issue if they want to pay dividend, if you buy stock in a particular stock with two different brokers. So that is why I want to be clarified.
Personally, I've not really, because Trove is not really a brokerage firm.
Can I come in?
Yeah, sure, you can come in. You can come in. 5 minutes to see you.
Michael, can you hear me?
Yeah, I can hear you. You can come in, yes. Can you hear me?
Michael, can you hear me?
Yes, I can hear you, yes.
Okay, so the thing is, because you bought the shares in two different places, what you're going to have to do is you're going to have to fill two different dividend funds. The one that you bought with Afri Invest, you have to fill out a dividend form, and in a dividend form, you put your CSCS number and all the other details. While the one you bought via Trove, I know that for some of you'd have to confirm from Trove. I know that for some of their accounts, they would sort out the dividends and wires to your bank accounts.
Yeah, busy with my
while I know that for some of the accounts, you'd have to manually fill. So only Trove can determine. But I think if you just want to be on the safe side of things, fill out the respective details in two different e-dividend forms. And so that way, when a dividend is paid, you get dividend for the shares held in two different places. And the dividends will be paid separately. So you get the dividends, but they will not be paid together because you bought through two different platforms. Yeah.
Let me comment. Sorry, Pat. For example, Trove. I know that when I used to use Trove to buy stocks, it's not for all companies actually. They usually just credit your account of, let's say, your Trove wallet. Now, in her own situation, I'm trying to understand something, because remember, for me, I believe it's all about the registrar. So why would you have to now start filling two different? I'm trying to also understand it. Why do you now have to start filling two different e-mandate form, when at the end of the day it's still the registrar that is going to handle the dividend payment distribution? Do you get what I'm saying?
Yes.
Am I there? Am I there? Okay, I think you can hear me. But Pat, I'll just encourage you to look for a way to harmonize or consolidate your stock.
Yes, I am.
Okay.
I mean, it depends. It depends. I can hear you. It depends on the platform, right? It depends on the registrars. Some registrars may look at it and put it together.
Yeah. Because I actually have, I think I had VFD, no, it's Nonberger, and then Afro Invest. And when they paid my dividend, I now have to start filling two different mandate forms. So yeah, exactly. But maybe Trove case might be different because Trove is a sub broker. They have to maybe contact the brokerage firm, the partner. But I just encourage you to look for a way to consolidate everything, so it will be much more easier.
Okay. Thank you.
You're welcome. Akin just joined. Akin, do you have any question?
Yeah, I do. It might be discussion. My question is, I know you're working on an app or could be a website. I don't know what it entails. Is it going to be a subscription-based app? And is it going to be for technical analysis, fundamental analysis, or how to track stocks, or does it come with some technical graph, as the case may be? That's my first question. And second question is looking at the capital market, and I've had people discuss about the US and Nigeria. And I think in terms of a profit between Nigeria and the US market, I think the Nigerian market is most profitable. So going by sectors, I just want your guest, Onome, to kind of, put us into futuristic views regarding each of these sectors, where the money is going, because the stock analysts will always say, follow the money. People talk about consumer sector, but it seems like the oil sector and the banking sector are kind of driving the market right now, maybe being dividend or whatever. But I just want him to give us a futuristic information regarding which sector is going to drive the economy into the fourth quarter of 2026 based on politics and election that is coming forward. Thank you.
Okay. Onome, are you there? I think Onome left.
Yes, I am. I dropped off a bit, but I'm back.
Okay.
Yeah, I'm back. Can you hear me?
Yeah, I can hear you. He was asking.
Yes, I got the question. I mean, so it's impossible to predict. I got the question. I got on the sectors why consumer goods, why there's a lot of focus on banking and oil and gas. That was the first question, and then the second question about what sectors drive the market in 2026. So I would start with the second question. It's impossible to predict. It's impossible to predict then, because we are just 2 months into the year. We have 10 months to go. A lot can happen in the next 10 months. So really, I'd rather look at the big picture and say, I think that the market will be broadly positive. I don't know if you got the previous part of the stream, but we discussed my outlook on the different sectors. And so different sectors, even within each sector, some sectors, I mean, if you take the banking sectors, tier 1 banks might do differently compared to tier 2 banks. So it's impossible to predict how Q4 is, because that's such a long time from now. 6 months is far off. So many things can happen. To your first question as to why the market seems to be driven by banks, is because banks are the most liquid. Banks tend to pay good dividends, and I would also say maybe to a third extent, banks aren't really that expensive. I mean, when you look at the most expensive banking stocks on a unit basis, I think you have three. Zenith at 70 or so naira, around 70 naira. we have GT around 100 naira. We have Stanbic around 100 naira. For the rest of the banking space, they're probably trading in the 40s and 50s. And so it's somewhat more affordable for people to buy those. So that's why banks are liquid. So that's why banks tend to take the front runner. For the oil and gas, I think it's some of that excitement is around Seplat, because obviously Seplat in Nigeria has been moving in the last couple of weeks. I've always said that I think at the pace is going, Seplat would probably be the very first company on the NGX to be trading at 10,000 naira a share or more. And so we are getting there, because with Seplat, at the hard part, the unpredictable part of Seplat to model is you have the Arno gas project that has started operations, and the only people who know how much it will generate with Seplat. And so that part of the business, one can't model profit wise and all that. So I think that you have that's what's driving the movement in Seplat. And also, since you had the news of Tony Enumeri taking a stake in that firm, you've had a lot of traffic in the stock on the Nigerian side. And then thirdly, there is a price differential between Seplat in Nigeria and Seplat in London. So from time to time, we tend to have a form of arbitrage, or people trying to profit between the price differentials in London and Lagos. Lagos, for instance, is around 7,000 naira plus, while London, if you work out the numbers, I think the numbers around 63 or so. I can't quite remember. So we have a fairly large differential. So from time to time, when you have that differential between the two prices, you're going to have traffic in this stock. And so for Aradel, I see people are also kind of excited about Aradel, because Aradel is quite easy to see. You are having their consolidation, the different, I would say, bits and pieces they've had in other assets. They are gradually scaling up and be taking up a lion's share. And just looking at the Aradel numbers, and what do you have? The stock is, I think, 850, and you had earnings per share for 2025, interim earnings per share of 91 naira. So the question is, and how I like to look at things simply, is to say if Aradel is doing 91 naira in profits, if that continues, or if that is constant, or that grows at say 10 to 15% every year, what would that be in the next say 3-4 years?
Akin, can you hear me? Akin is no longer here. So, Onome, you're breaking. I think we lost you for a bit. Let me see. Enoch, can you hear me?
Okay.
Let me be sure.
Yes, sir. Yes. Yes, sir.
Let me try to answer your question on you're asking. Come again with your question. Let me be sure.
Okay. Coach Micah, there's only just 3 basic questions I want to ask you so that I'll clear my mind. What has been confusing me is, number one, what is the difference between treasury bills and saving bonds? These two things, because I see I can be getting me confused when it comes to quarter 2, quarter 3, quarter, then complete 1 year, which confuse me, the difference between treasury bills and saving bonds. Number 2, now we all know that the return on, let me say, treasury bills or money market funds base is always changing based on inflation and the bank policy. Like, it changes based on inflation and interest rate. So what is the minimum, like what is the minimum percentage the money market fund can deliver? The minimum, if the market is unstable, the minimum it can deliver within 1 year. Number 2, what is also the minimum if the market is unstable, and the maximum, both of them, the mutual fund, the Stanbic mutual fund, or you say Nigeria stock mutual fund can deliver within 1 year, the minimum and the maximum if the economic is unstable, and also difference between saving bonds and treasury bills. So it's confusing me. So
Okay, let me start. Let me start with the difference between bonds and treasury bills. So bonds and treasury bills are basically ways the government used to borrow money from the citizens or from people. Let me not just use citizens. It could be institutions, it could be individuals, it could be HNI. HNI stands for high net worth individuals. Now the core difference is that FGN bonds or bonds most of the time tends to be on a longer time frame. So you could see a bond, you can see a 10-year bond. Maybe the government wants to fund infrastructure, they want to build a road, they can launch a sukuk bond, they can launch a bond, an infrastructure bond or what's not, just to be able to collect loans or collect loans from people to be able to fund that project, right? And then pay back those loans. Maybe it could be every quarter, it could be every month. It just depends on the kind of structure they want to. It just depends on the kind of way they want to structure that particular bond. Now, for treasury bills are also loans that the government takes. It's just that treasury bills tends to be much more shorter. You could see a 1-year T-bill, you could see a 2-year T-bill, but it's much more shorter than bonds. So that's the core difference between the both of them. So it's just for you to now know which one is the best fit for me to invest into, right? Now, on your second question in regards to money market fund, or in regards to money market fund, was it money market fund that you asked?
Money market fund and mutual fund, the minimum and the maximum percentage return in stability and everything.
A money market fund is a mutual fund. I don't know if you understand. A mutual fund is basically like, let me say Stanbic, for example, as an institution, they pull money from people and launch a money market fund inside that mutual fund. So a money market fund is a mutual fund. In a mutual fund, you can have an equity mutual fund, you can have a money market mutual fund, you can have different kind of fund. A mutual fund is just a money market fund is just an aspect of a mutual fund. Now, talking about the minimum and maximum, for me, I will not say that I cannot give a direct answer to the minimum and maximum because it all boils down to the economy, right? There's no, I mean, we can see sometimes if the economy is at its best, a money market fund can actually drop in terms of the kind of returns they will give you. But I mean, a money market fund that gives you 8% is not bad in a stable economy. A money market fund that gives you 18% is not bad in a high inflation economy, in an economy where the exchange rate is very, very volatile, right? So I will not say there is a fixed, or I will not say there is a minimum and a maximum. It's all about the situation of the country or the economy at that particular time when the fund is operating. So I mean, so there is no minimum, there is no maximum, if that makes sense. So does that answer your question?
Yes, Mr. Micah. And the last is that if I actually invest my money after invest 2.0, or that I buy a stock maybe in Bamboo, and the app closes and the app is no longer in existence, does it mean that my stock or treasury bill or anything I bought, any financial capital instrument I bought is gone or lost? If I bought after invest 2.0.
You're not investing in after invest. In fact, what you should be concerned about is not your investment, it's the money you have in your wallet, right? For example, when you open an after invest account, definitely they'll give you a CSCS, you have a CHN. Your CSCS is what you can use to track your stocks. There are some of our parents that invested in stocks when in the 90s. Some of them still have access to can still get their stocks now, even though some of those brokers have gone away. And how did they get their stocks? It's definitely leveraging on the documents they used to purchase that share. So and that's why you have your CSCS. So even if after invest close today, you can literally move over to another brokerage firm and then use your CSCS and your CHN to be able to get back your stocks and use that brokerage firm to manage your stocks. So what you should be more concerned about is the money you are yet to withdraw, which is the money you have in your wallet. I don't really have an idea if they are a custodian or if they have like a trustee that holds the money. It's something I'm yet to confirm, but I believe that they should have. I believe that they're not the ones. I mean, I'm not sure. Let me not say what I don't know. But when it comes to your investment, your stocks, it's not you don't need to be bothered about them. You just be concerned about the money you have in your wallet. We lost you for a bit. I don't know. First of all, if I come to Nome, does that answer your question?
Yes, sir. Also, both with treasury, people don't invest in it, and the app closes. It's too accessible.
No, you can still access it. Yes. Let me come over to Onome. Are you there?
Yes, I am. I'm back now.
Okay. We lost you for a minute. you are trying to round up Akin's question around. I think Akin asked a question around the market where you see you're talking about consumer goods and the likes of Aradel and we lost you when you are trying to conclude with that.
Okay, so I've explained the oil and gas part. Um, for the consumer goods side of things, I think what people want to see was 2025 was a recovery year for them. So for 2026, what people want to see is, are we going to see them maintain the same performance? Some of these firms have not taken, or to put it differently, last year some of these firms may have not taken full price effects of inflation. And so are we going to see them do so? While for some of them, um, last year, the prices that they are, I mean, material prices, cost of goods, cost of raw material prices kind of dipped, but they've decided to hold prices constant. So the question is, are they going to do so, or are they going to reduce prices? Because with a lot of these consumer goods firms, you have prices move. I mean, you have the prices that they sell, prices move up and down. So maybe that's why you're not seeing so much excitement in that space and all that. But I think that once people see the first and second quarter results, if they maintain that same improvement, then you should see that reflect in upward movement in the prices. And then for some of them, the numbers, and in some cases, they are far off from paying dividends, right? So when you look at the Cadbury will need a couple of years to return to positive retained earnings before they can pay dividends. Or maybe if we look at the brewers, look at the Nigerian breweries, at best, if we're lucky this year, maybe they pay a small interim dividend. If you look at the what international breweries, they're not paying dividend anytime soon. So the Nigerian market is also one that is very heavily driven. And then maybe lastly, prices have appreciated. I mean, if you look at Unilever, I think year on year, the last 1 year, or comparing 2024 to 2025, I think Unilever probably should have done 50% or 60% increase in price. So all those factors tend to happen. You can't expect prices to go up by 50, 100% every year. No, it doesn't work that way. So some years you'll have maybe 10, 20, 30% growth. And then you have your 24, 25 year on year change in price that's massive due to just a recovering state and all that. Yeah.
Okay, thank you so much for that. Another question the person asked me, which is more of like a personal question, was asking what Affirmetrics is all about. So Affirmetrics is like an insight tool we are building where we try to see how we can leverage on the data around the market to be able to offer intelligence to users. So you should be able to. I think some of you guys don't know how to go through a company's financial statements. So we are trying to build a tool that can be able to like visualize some of those things in the financial statement, and then you can be able to leverage on that to make informed decisions. Let me see. We're about to call it a day, but before we call it a day, someone was asking what's really moving the cap. I mean, Deep Cap recently dropped their reports, and then it was not the best of reports, and then the price has been moving. And I believe it was because of some, I say that an investment from PMT, and they say it's in the works. So people are trying to buy into it before it materializes. I don't know if you saw that headline.
Yeah, so they said that they're going to go into mining financing across Africa. So that's kind of led to the run we saw in the price. Then you also have a new investor that has announced plans to inject money into the company. So those are the two factors that have pushed that stock price upward. Yeah, that's what's behind the rally, the capital.
Okay. So we're about to call it a day. I want to give some people the opportunity to ask their questions. So we have OND on here. OND, do you have any question? You're muted already, so go ahead if you have any questions. ON on. Okay, Umen is not talking, so we may have to bring on grade one. Grade underscore one. Grade underscore one.
Good evening. Good
Good
evening.
evening. How are you doing? Yeah, good evening. How are you?
I really want to first of all appreciate you and the team for this great insights and the guests for
Yeah.
coming. What I want to ask is, like now, the market is closed though. I came from the crypto space. I know
Yeah.
crypto trade 24/7, but with stock, it trades 4 hours in a day. But now, at weekends now, the market is closed. What is moving the price of some stocks? By the time we open on Monday, you see that the
Yeah.
price that it's closed at it will jump ahead of that price to open. What is there an insider trading, or is there a way that maybe high net individuals do their own kind of trading that it moves the market? That's what
So,
usually confuses me. Thank
so
you.
let me see. Okay. Honorable, do you get his question? I'm trying to see if I understood his question. Do you understand his
Yes, I
question?
did.
Okay.
Yes, I did. So let me reply how I think I understand you. So the thing, or let me take it from two angles. So the first is when, if you notice the very first 15 minutes, when the market
Yeah.
opens at 10, you have a rush, right? You have a flurry of orders. What usually happens is that for the brokers, they they are able to queue their orders before 10, right? So that's why you have that um, flurry. So brokers, before the market opens at 10, they can put in offer. And then once the market opens, the very first 10, 15 minutes, a lot of those trades I see
Yeah.
are trades that were put in by brokers before then. So brokers have that privilege. And to an extent, the same also applies from 2:20 p.m. to 2:30 p.m. So the last 10 minutes for retail, most retail is actually retail investors do not have access. Their own trade ends at 20 minutes past 2. But between 2:20 to I think 2:30, the brokers can also put in their orders as well. So once the market opens at 10 a.m., that's general for everyone. The brokers may have their privileges and all that, but for every other person, that's when they can put in their own orders. And so once the market is closed, retail, you can't put in any orders. So Friday by 2:20, 2:30 p.m., the market is closed. Nobody can put in any orders, or no orders. To put it differently, no orders can be executed. Now, as it is, today is Saturday evening. You can put an order, right? You can set a buy order, but it will not be executed till the market opens. So trading does not happen on weekends. 2:30 p.m. trading is over. Outside of the official hours, you can put in orders, but they will only be executed during market hours. Yeah.
Thank you.
Thank you
I
so much.
understand quite. It's quite understandable. Please, the
Okay.
last question. I've been trying to ask questions since, if you notice, my
Yeah,
oga,
yeah.
but so the last question now. What 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 can we say about some stocks that doesn't have free float, and they are moving every day? They are exceeding the maximum, as in they are making
10%.
meeting the 10% maximum profit every day, like chilies. Cheesix, Abi cheese something that just came out at 1.8 or so. Today is around 6 point something naira that is selling at. So and the stock does not have free float. There's no, you cannot buy it at anywhere. So where does the trade go on? Thank you.
Go ahead on if you
Okay.
want to answer that. Yeah.
So the thing is, let me put it this way: um the fact that you look at it. So when you look at, say, cities, and you see most of the time it's on full bid and you don't see any offer, it doesn't mean that there were no trades, right? But because of the strong demand, you wouldn't see the offers, because as soon as offers are placed, the offers are executed. So that's why you might see it on full bid, maybe you see 100,000 shares traded. You may not see it reflect on your platform on the sell side of things, but it's placed there, right? And even with on regular days, you tend to see that happen with stocks that are not on full bid. So you can place an offer at say maybe 2 naira 20 kobo, and maybe the best buy offer is say 2 naira 30 kobo. Sometimes the offer might be so far down the line it may not reflect, or sometimes the offer might be executed almost immediately as you put it. So it may not reflect on your screen at the moment, but once you put it in. So if, for instance, there is a offer for a buy offer for say 2 naira 31 kobo, and you place a buy offer at 2 naira 32 kobo, your 2 naira 32 kobo, depending on the quantity, may be executed. And so as soon as you put it, it may not even reflect on the screen, but it goes. So that's what you have with cities, is that yes, as soon as the price target, the offer is met, the sell price is met, then it's executed. And a lot of times it happens so fast that it doesn't reflect on the screen. Yeah.
Thank you so much for the response to the question, Onome. Before we call it a day, I would love for you, because we have already done like 2 hours, 16 minutes. I don't know if anybody has any other question. Let me go through the comment section. Most of the questions we have already gone through them. So, guys, please do me a quick favor. Do well to like this live session if you're here to like it. It's very important so the video can reach a wider audience. Let me see. If you have another question, any good question. Okay. So thank you so much for spending this time with us. The last time I had you was, I think, sometime last year. It's been almost a very long time. So thank you so much for coming on. I'll do well to, for some people that missed the earlier intro and some of the things you're doing and where they could find you, do it to talk about that, so that people that want to, maybe reach out on a one-on-one basis, or people that want to go through the videos, they can go ahead to ask, please.
I think someone asked the question, if I heard correctly.
Okay, I muted the person because let me unmute her. I think it's Pat.
I have a question, please.
Oh, please ask your question, Pat.
Please, can you educate me on this? Because most of the ETF, Nigeria ETF, they are all of full bid currently. And the one that is not of full bid, I think VSP board. Please, how about that ETF? How is it like? Is it okay? Can one buy it? What is your insight? What do you know about the ETF?
Okay. No, you can respond now. For me, yeah, go ahead.
Okay, so a lot of times I'm not really a fan of ETFs for the Nigerian market, because most of them are not liquid. So as much as possible, if you're going to buy an investment, you should buy it because it's liquid. I think you only have one or two of them that are liquid. Probably ETFs are around that's let's say cover the NGX 30, right? And most of the time they're not liquid. I know that yes, some of them are wrong, but they're not very liquid. And if you want to look at the numbers, look at what your typical ETF is trading and look at what your stock is trading. I doubt you have, most of the time you don't barely have 10,000 units trading. So for the bond ETF, the VSP bond is the bond ETF. Within it contains different bonds. I haven't looked at that in a while, so I can't opine. All I would say though is that depending depending on the composition of the bond ETFs and depending on when those ETFs were bought, or when those bonds were bought, that ETF may be slightly positive or negative. So if you want to track the performance and have further details, just search for the fact sheet. The fact sheet is a document, a brief document that has all the details, past returns, current composition, and all you need to know about it. So if you do VSP bond ETF fact sheet, do a Google search. I'm sure you should get into it. Check Vertiva Asset Management. I think Vertiva is the firm behind it. You can go through the bond, the fact sheet, and see how well it has done the last couple of years, and then that information that you want to know. I'm more of a equity and crypto guy, so I don't have the numbers in front of me. Yeah.
Okay. So for me, I'll just encourage you, like Onome said, to go to the fact sheet. That's where you'll be able to get the details on how the ETF have performed so far. I think some of the best ETF is the Stanbic 30 ETF, and it has really been skyrocketing, and that's why we are seeing many people, because one of the things that happens is that when many people see something start going up, they tend to want to rush into buy. So I'll just encourage you not to rush in like every other person. Just take your time and try to even understand whether it's a good fit for your own investment objective before you invest. But just know that, again, the ETF basically, they invest in a basket of 30 different stocks. So you just want to really know whether it's something that is tailored to your own goals before you invest into it. So that's my own perspective. I mean, we have done like 2 hours, 21 minutes. So, please plug in, like, where can they find you? They want to reach out to you, they want to learn more or listen to some of your education in regards to the market.
On YouTube, you can search for Green Ticker Warrior. Yeah, I've dropped it in the. Yeah, I dropped it in the chat box. I don't know if you can still see it.
I've seen it.
So YouTube, Green Ticker Warrior. There's a website, greentickertails.com, Twitter, Green Ticker Tail, and Spotify, Instagram, Green Ticker Tails as well. So once wherever, and then my own personal handle, QUANSIMOGO. But if you tweet at or contact any of the Green Ticker handles, then you can always reach me via them as well. So wherever, Twitter, Instagram, everywhere else, search for Green Ticker Tail, you'd find me there. Yeah.
Okay, so guys, quick one. Onome is very good. Green Ticker Tail is very active on X. They usually have like these sessions, I think on Sundays, and I think on Fridays as well. But usually on Sundays, I tend to join the Sundays once chance or available, where they discuss the market, and you get to have knowledge around what happened the previous week, what's likely going to happen the next week, and you get educated, so you'll be able to make informed decision. Like I said, Green Ticker Tails on YouTube, I go there to get information about the market as well. So I believe that it's going to be beneficial for most of you that are trying to navigate your way when it comes to investing and making informed decisions. So thank you so much, Onome, for this opportunity, for coming live here and educating us. I really do appreciate the time, the effort. I was about to even, if you notice, I muted Pat's mic because I wanted to end, but you are just wanted to answer the question. So I really do appreciate.
Yeah, so thank you for having me, and enjoyed myself. Thank you for bringing me in.
So guys, we are going to call it a day at this point. Hopefully by sometime next month we'll get to have another session. So bye guys. Thank you so much once more. Bye.
Thank you.
Bye everyone.
You, Mr.
Thank you.
Thank
Bye,
you,
Pat.
Mr.
Thank you.
Thank you.
Thank you, sir.